All right, what is going on, Discord family and YouTube family, and welcome back to another edition of Market Review with me, T. Hobbs. Uh, Today we'll be reviewing the S&P 500, E-mini Dow, the Nasdaq, taking a look at the volatility index, reviewing some earnings that are coming up this week that I believe are going to be significant, and some of the news for the week. All right. So, if you remember last week, we talked about this 3 month candle. We talked about this being an equilibrium. And I said, hey, I'm extremely bearish coming into this level. I think we closed at like the 20s, 200s or something like that. I said, I'm still very bearish all the way into this level. And we ended up tapping into, it was like 49.99 or 5,000. And then we immediately found buyers, right? Which is exactly what I wanted, right? Like I wanted us to tap into 2023 October prices. I actually said that this would be the bottom. I'm not sure if it's going to be the bottom. We'll see what happens. I mean, we came down here so fast that we're buying this thing up at a very, very rapid pace. But we talked about this level down here at the 4900s. We tapped into it very cleanly, and then we bought right up immediately. I mean, we had a day last week, I think it was Wednesday, we rallied 10% to the upside, which is crazy when you really think about it. But ultimately, the levels work, the top-down analysis work. I talked about Tokyo gapping down to potentially go up, right? Or, pushing up to go down lower. They ended up gapping it down in at a very, very key discounted area, right? So once they did that, it was pretty much GG's the rest of the week. We double bottom off that low, and then we just rallied back to the upside. But we still got a lot of work to do. If you're a bull, if you're a bear, you're probably shaking in your bones a little bit, right? Like, because the defense needs to be there. So just taking a quick look at the 3 month candle. Like I said, the biggest significance out of the 3 month candle, one, it's not over. It's got 2 months and 18 days left in it. But the biggest significance is that when we came down to this equilibrium of the 3 month range, we found buyers, right? And that's definitive. I mean, a 500 point push on the S&P, 600 points on the S&P is pretty significant, right? Same thing over here on the Nasdaq. I think we had a day, bottom left here, we had a day where the Nasdaq rallied, I think 2,000 points, and the Dow Jones on Wednesday rallied 3,500 points. Like, when you get that, that's a roar from the bulls, right? Like, is it enough to flip the tide and turn, all-time highs? We'll see, because when they start selling, it gets really aggressive. But we'll talk about that more when we talk about the volatility index. All right, so moving down to the monthly time frame on the S&P 500 over here in the top left, we'll go ahead and expand that. Again, I take a look at the monthly briefly just because I like to see where we are on the monthly. It gives me a good idea of where we're heading, what we're doing. And ultimately, we got 2 weeks, 2.5, 3 weeks. And in those 2 weeks, we're going to get a lot happening over the next 2 weeks. Number one, Trump every single day is a crapshoot. Like, we just don't know what he's going to do every day, right? Like, we just don't know, right? But, the other part of that is the mandatory things, right? The things that happen every year, which is we're in the most bullish month of the year, which is April, number one. Number two, we have why it's so bullish is because it's the second quarter and all of the reports start coming in from the current policies, right? And what I mean by that is we got earnings reports from the banks, we got earnings reports from tech rolling into May and June, right? And this is when things get extremely volatile, or the volatility actually comes down because the earnings end up kind of stabilizing the market, right? So we'll see what happens as we move down to the monthly time frame on the Dow Jones as well. You can take a look at the Dow Jones and you can see on the monthly time frame, again, we swept these lows. We came into October 2023 lows, which was very key on the monthly. This was a fair value gap on the monthly. We closed that gap perfectly. I mean, you couldn't get any more perfect than 36,693 or 700, whatever it is. We closed that gap perfectly and we immediately found buyers. Now, this is a good sign for starters. However, until we trade back above last month's candle on the monthly, we're still in a downtrend, right? You can call this a retracement of a bullish trend. I'm calling it what I'm seeing on the right side of price, which is a downtrend and now a bullish retracement on the monthly candle. It's 14 days left or 17 days left, give or take. This is going to be a very interesting candle. My thought process is it'll finish extremely bullish with a very aggressive wick, but won't take the high. And I'll be looking for more downside coming in May, right? It's what I've been saying all year. I thought that we kind of skipped a cycle with COVID of the market kind of selling off in May, right? Go away in May, come back another day or something like that, whatever they say. But I feel like we skipped that cycle. And I've been saying this all year that at some point the market is going to get back in tune with that. And it's going to have to come with an aggressive liquidation back down to the 2023 levels and then failure at these highs. And then we start tapping back into 2020 levels. That's just my opinion. That's not based on any type of objective facts. So let's get back to the facts. So we come over here to the NASDAQ and you can see you take that same line as 16,882, closing that gap from November, October timeframe. This was the low of the market, the higher low being placed. And that's when we went to all-time highs. The fact that we ate this thing up like Scooby snacks, right, does not bode well for the bulls, right, or for the bears. However, the bears can hold their hat on the fact that even with all of this buying, right, the bulls have yet to take out the previous month's high. Once that happens, that's going to turn on the monthly time frame. That's going to turn me very, very bullish, right? Because I think we're going to be going into what's called price discovery mode once we get back above those all-time highs. All right, moving down to the next time frame, over to the weekly time frame. Again, just solidifying what we're definitely seeing on the 3-month and the monthly. We can see that we got that aggressive rally. You can start to see it much, much clearer on the weekly time frame. That level over here on from October, right? The S&P did not trade perfectly into that level, but it did. If you take a Fibonacci retracement from the high to the low of this range, you can see, just like we talked about in the previous top-down analysis, that this level was going to get tested, right? And that the market was going to, the bulls were going to have something to say about this level, right? Not to mention, taking off the Fibonacci retracement, we go over here to the 200 EMA. Oh, that's the 9 EMA, my bad. The 200 EMA on the daily or on the weekly time frame, right? We talked about the history of the 200 EMA on the weekly time frame. How rare, if you just go back in time, you go to the weekly and you just draw, you just can follow this 200 EMA, and you'll see that it's very, very rare. This was 2008 where we traded below it and we continued to trade below it. It's very, very rare that the market gets below the 200 EMA and continues, right? It's very rare, because if you think about it, what is that saying? Over the last 200 days, right, we're below the average price of the indice. That's a buy, right? Like for anybody. Now, will it continue to go lower? I don't know. But if you can say that you bought price, if you can say that you bought the indices, just think about like big money, how big money thinks, right? Like they don't care where they buy, but if they can get it, an indice that's 22% off, you know, what I mean? Like that's a deal, right? Like that's a deal. So you got to think about it like that. Like the 200 EMA in this point was representing almost 20% decline from the all-time highs. Like people are going to step in at those levels, right? The context of the market is so important, right? So anyway, we failed to get below the 200 EMA and hold. Instead, we traded down below it, we swept it, and we immediately found buyers. Now, did those buyers accomplish much? Well, they did on the daily time frame, but on the weekly time frame, they didn't do their job yet, right? We have a drop, we have a basing candle. That's all this really is. And this could continue to be a rally, which is what I'm leaning toward it to be, right? A continuation rally back to the upside, or this could fail and then we could put a drop and then continue to go lower. I don't foresee that happening this week. I'm more of the bullish side this week, coming from major discount. We're at least going to come back up here and test this daily imbalance, which we'll talk about when we get to the 4-hour time frame. All right. Moving down over to the Dow Jones on the same time frame. Again, one of the indices, some of these indices trade down lower, but all of them do basically the same thing. If I take that same Fibonacci retracement, right, from the July 23rd high and the October 23rd low, you can see, unlike the S&P 500, the Dow tapped right into 50%. The Dow tapped right into 50%, and right. Close the door. Thank you. The Dow tapped right into the 50%. Sorry, that's my kids coming into the office, but the Dow tapped right into 50% as opposed to the S&P 500, which is, again, a lot more liquid. It takes a lot more to move the S&P than it does the Dow Jones. The Dow tapped perfectly into 50% of the previous high and previous low. as where the S&P 500 tapped into the 70%. Either way it goes, they both tapped into this range from 2023 and immediately found buyers, which is very important because on the weekly and the monthly and the 3 month is, which is what I just showed you, this level was extremely important, right? Like we're still in a bull market, right? Or an uptrend if this level holds, which means that the target, if these buyers are true, they're going to be targeting these all-time highs at some point, right? Like I don't think that that's what they're going to do, but that's just my personal opinion, like I said before. So again, we'll discuss a little further as we break down to the 4-hour time frame. Moving over into the NASDAQ on the weekly time frame. Again, go back to that range from July of 2023 to October of 2023. And you can see, like I said, on the NASDAQ, we came all the way down to 16,429. Now, this is a sign that the bears definitely wanted to get to this level. The question is, do they want to take out this level? What I always say about people, or what I always say about the market, think about it as I'm old, right? So I'm like in my 40s. So I used to play this game when I was a kid called Dig Dug. You should look up this game because it has a great analogy that represents, or that it correlates to the market, right? The Dig Dug analogy essentially is down here is a lot of dirt, right? That's what the Dig Dug did. They would come down here and they would dig out the dirt. They would go back to the other end of the tunnel and drop that dirt off. And then when they came back down, they could go down further. They could go down there much easier because there was a lot less dirt. Essentially, the market moves on the same thesis, right? As long as you can get the path of least resistance moved out of the way, then the market can travel through that area the next time it comes down there with ease. This is the first, what they call mitigation, right? Or me in my brain, this is the first attempt for the Dig Dug fellas to go down here and dig the dirt out, okay? This level literally brought the all-time high. So it makes sense that this level was also had enough dirt down here or liquidity down here to push the market up 15% in a week, guaranteed. But what it didn't have enough dirt or ammo to do was get above the previous week's high, right? And that matters, in my opinion, right? Will it continue? We'll see. We'll see what happens. But like I said, I'm leaning toward being more bullish, but not for the long term. I'm bullish as long as I'm bullish until we start to get back above this 20,055 area, right? I don't expect this to be a rally to go all the way back up. I expect it to be a short-lived rally in April, close the month green, and then I expect more selling in May. But that's, again, personal opinion, not objective. Objectively, we're bullish. That's all that matters right now, right? All right, moving down to the daily time frame on the S&P 500. You can see, like I illustrated to you guys last week, we're below the 200 EMA. Again, this is why I'm still remaining to be a bear, right? Like I'm bullish down. I'm bullish up until we get, like I just showed you on the NASDAQ, I'm bullish until we get back up to this area. Then I'm going to be gauging buyers, right? Because if we just think about it from a sense of, this is the last low we broke, right? If the market broke this last low right here, right? This is the last low somewhere in here, right? From a swing standpoint. When we go up to that previous high, which is right here, structurally, 50% sits right at the 200 EMA. Coincidence? Probably not, right? Like, in my opinion, the April rally will be a choppy rally, right? It's going to take a long time to get up here. We're going to have very, very aggressive days, right? But we're going to range all the way up here until we take out these highs. And the second we take out these highs, I think that the bears are going to come in. They're going to come in with the real hammer, right? I think we just got a taste of the first hammer, and now we're getting the retracement. So we'll see what happens. Again, I could be completely wrong. We could go straight to all-time highs from here, but I'm just giving you my opinion mixed with some objective facts, right? All right, so on the daily, like I talked about, that Wednesday candle was crazy. I mean, there's no other way to explain it. Like I've never seen, I've been trading futures for 3 years. I've been trading for about 5 or 6 years, but I've never seen a 13.5 candle, 13.5% candle. And the majority of this, I'd say 10% of it was done in like probably 10 minutes max. I mean, we've been seeing some incredible things out of this market right now. And the only thing I can tell you is, if you're in the wrong direction and you keep getting killed, size down, man. Like, that's all you need to do. So you can trade like you normally trade if your systems work, but you can do it with a little bit more comfort. All right. So the daily candle, though, what did we do? We rallied. This is called a bull flag, right? So as long as this daily candle, the pole of the daily candle holds, right, and we just continue to walk up this wedge, essentially we're gonna break out of the bull flag, right, and go higher. I mean, it's just simple candlestick patterns 101, right? But can these bears still fail? Yeah, but it's in my opinion is low quality for them. Like, I just don't think the market's going to fail right here. I think for sure we're going to go and target this liquidity at 55.50, right? And you'll see when I come down to the 4 hour, I have these levels marked out. But I think we'll go and target this imbalance here. We'll go back up and target the 200 EMA. And then once we get up here, this is going to be the true test, right? I can already tell you that's going to be the title of that video. The true test is here, right? Like, so we'll see what happens. But from a daily time frame, we're very bullish. I do not want to see price trade back below 51.46, or I'm going to start thinking, okay, it may be time to, really start thinking about this market going down from here. But for now, I'm bullish all the way up into about 58.28. I think we can get a clear path up to that level. And then once we get up there, I'll reassess what the buyers have been able to accomplish. All right. Moving over to the daily time frame on the Dow Jones, we can see it's very similar activity. Again, the daily candle that closed on Friday, we closed at the highs, but we were unable to take the previous day high, whether it be because we didn't have much news. I mean, we had a lot of news, don't get it twisted, but we had a lot of speakers too, right? And those speakers can sometimes put the market in consolidation, right? So whatever the reason was, Friday was unable to get above Thursday's candle, but that's not necessarily bearish. Okay, remember, we're in an uptrend on this side of price. So what you really want to focus on is not what we're doing at the highs, but what we're doing at the lows. You ask yourself, higher highs and higher lows is an uptrend. So Monday's low is the low. Since Monday, what have we done? Tuesday, we put in a higher low. Wednesday, we swept that low and put in a higher high. Thursday, we made a higher low. We swept the high to make a new high. And then Friday, we made a new low, right? A higher low, but we weren't able to get above the high. And that's, if you're a bear, like an over aggressive bear, you're going to be thinking, well, we didn't get above this previous candle, so that's bearish. No, it's not, because the market made a new low, right? A higher low. That's what you need to focus on. So in that sense, I'm very much bullish all the way up until we get an insane level on the Dow at 43,152. I expect this volume imbalance to be filled at 41,855, and then we'll go from there, right? I'll re-engage price from there. We go over to the NASDAQ on the daily time frame. Again, it's more of the same. We got those higher lows being placed from Sunday, right? And then just making higher lows the whole way up. NASDAQ, unlike the other two, has already filled the volume imbalance just because it was a little lower, which is, again, very bullish, because after the fill of the volume imbalance, we found sellers, and then we found buyers strong enough to hold a higher low on Friday, and then looking like we want to continue to push, right? So I'd be looking for somewhat of a gap up out of the Tokyo session as we finishing off at these highs, potentially a gap up, fill that gap, maybe come back down, close this volume imbalance here, and then continue to push higher. That's kind of what I'm looking at. And you can see the cup and handle. If you're a candlestick type of person, you can see the cup and handle starting to be formed as well. So, all right, moving down to the 4 hour, we'll break out some of these levels going into the week. Let me switch everything over to the 4 hour, and then we'll break down my actual levels for the week. We'll go over the volatility index last, and then we'll talk about news and upcoming events. Then we'll get you guys out of here. All right, breaking down the top-down analysis of my levels for the week on the S&P 500 first. This is the instrument that I primarily trade as long as the VIX is over 30. You want to know why? Do your research on the VIX, right? Okay, so levels that I have of importance. Number one, 4 hour supply at 46.50. That's that level that we talked about on the weekly time frame when I said, hey, I want to see us trade all the way up and above 58. This is the level that we need to break to get to 58, right? So 46.4650 through roughly about 57.7375. Okay. Then we have that daily volume imbalance that I talked about. This big gap in price. It's an in dog. It's a DVI, whatever you want to call it. Right. This is what I call it. I call it a daily volume imbalance because there's no price action that's happening there. Right. The market had a heart murmur right there is how I look at it. Right. That level sits between 55.51 and roughly about 55.84. Okay. Those are targets going into this week. Right. And then we have a fair value gap. This is more so on the 15-minute time frame. This is more so just for my intraday trading right here. And then a 4-hour volume imbalance from Wednesday, April 9th at 06 to the low of the candle on Thursday, April 10th at 10 a.m. Below that, we have a 4-hour demand zone that was created from that huge rally, like I talked about on the weekly, the 13% day. That created a demand zone because it got above these highs here. That level sits at 49.9950 to roughly about 48.7425. Right. So what am I looking for on the week? Right. If I look at the weekly price action, right, if we're going to be bullish, you want to see the market trade down first. Now we're in a strong uptrend, right? And we were able to defend those lows that I talked about on the weekly and the daily. If we're able to defend those lows, then I expect that the market's not going to trade down much further. So therefore, my levels are simple. I'm pulling from the bottom of the range at 53.6525, and I'm looking for about a 7.91% move back to the upside, targeting the monthly fib, which is 50% of last month's price action at 5790.75. The second level that I'm looking for is I'm looking for the market to trade down below my fair value gap, pushing below previous day low, coming down to try to close this gap, maybe tapping into the weekly fib and even the 4-hour DV or 4-hour volume imbalance. Tapping into the weekly because the market really likes to tap into the weekly fib before going higher. At 5180, and I'll be looking for about an 8.19% move based off the data of the last 5 weeks, targeting 560625 to the upside for the weekly projection bullish. This is also weekly settlement. There's a monthly settlement level that sits inside of this 4-hour supply. So there's a ton of reasons or liquidity reasons and targets that the market could be looking to tap into back to the upside going into this week. To the downside, meaning I want to see the market trade up first, right? So even if we do get a gap up, I'll be bullish until we start to hit these targets super early, right? If we start to hit these targets on Tuesday and Wednesday, I'm looking to be a bear coming right the F back down, right? And where am I looking to go to? I'm looking for 7.51% from this 4-hour supply zone. So if we can't get back into the monthly fib, this 5,800 level that I previously referenced on the weekly, the monthly, and the 3-month, right? If we can't get back above this level, then I'm expecting the market to come back down, right? And then we start to descend, dig dug, right? We took out these, mitigated these lows, come back up and mitigate the highs. And now we come down with even more power with less support when we come back down here. So what does that level looks like? I'm looking at about 7.51% from the 4-hour supply zone, 56.4650 down to 52.2175 on the bearish projection for the week. The secondary bearish projection is going to be the DVI, right? So the daily volume imbalance, the in-dog, whatever you want to call it, this big ass gap right here in price, right? If price comes up here, I'm looking for the market to go short, right? Potentially. It just depends on how we approach this level. If we just run through it, close it, then I'm going to be looking at the next level to go short, right? For the end of the week, meaning Monday, Tuesday, I expect us to flow through this like butter, right? But by Wednesday, if we gapped up down here, right, by Wednesday, I'm gonna be looking for some type of consolidation, and then Thursday maybe we get some type of turnaround or something like that, right? But from that level, the DVI, it takes us down about 7.64% down to 51.2725. That leads me to my other thesis that I talked about when we were discussing the monthly. I expect the monthly to end bullish, right? But not take out the previous month's high. Because we rallied so much to start the month, my thesis is that over the next 17 days, we're going to play in this large range for a while, right? Before we get closer to the close of the month, and then we rally aggressively, trapping more bulls at the highs, and then we come into May and just straight dump, right? Just rug pull, right? So we'll see what happens, but that's kind of my thesis of how I'm looking at April and May turning out. So we'll see what happens. We'll go over to the Dow Jones. Again, we switched it back over to the 4-hour time frame as well. We bring out our top-down analysis levels, and I will discuss my weekly projections on the week. All right, so to the bullish side, right, we look at the weekly fib down there. We're looking at 38.924, right, looking for the market to tap into that level. And over the last 5 weeks, we're looking at about 7.04% on the ATR, pushing into 41,680. Our daily volume imbalance level with that projection would not be triggered, but I'm anticipating the market at least going up here. We'll see. I may just be off by a few points, and I'm okay with that, right? However, from the bottom of the range, right here at 40263, I'll be looking for about 6.8%. And I like this a lot better because that fits my thesis of the market trading back into these highs up here, maybe even sweeping them, pushing above the monthly fib, pushing into 43,001, right? And then potentially coming down. We'll see how they deliver it, but that's, again, how I'm viewing it. Down here, I'm bullish. Up there, I'm bearish. It's just that simple. To the bearish thesis, right? I want to see the market trade up first. So a gap up would be very bearish for me, but bullish in the short term, right? If we push up, what I'm looking for is for the market to pull down from the DVI, which is here at 41,947 through roughly about 42,022. And I'd be looking for the market to push down 6.54% into 39,194, right? Now, from the previous day high, right? Well, actually, these are old levels. I'm not going to mark that. I don't know why I didn't have. I think I only put 2 levels for the Dow Jones. Pay no attention to these previous red lines right here. I'm actually going to delete them because there's going to be another level. I just didn't mark it on the Dow Jones back to the downside on the bear side. Pretty sure I marked 2 levels on each instrument. I just might have forgot. But essentially what you'd be looking for is about 6.54%. So we can actually do that, right here live. So the DVI is the first level that I'd be looking for the market to trade up into. And then if we can trade above the DVI into the monthly fib, I'd be looking for the market to come down 6.54%. We go to roughly about basically right where we are right now, the daily fib. That's why I didn't mark it. I remember now. Yeah. So the daily fib is actually the target from the monthly fib at 39,912. So we'd be looking for about a 6.75 push back down to that level, tapping into from the monthly fib. To the bullish side, right? We discussed already these areas, but I want you to understand that if we go up first, right, that is going to be bearish for me. So if we start hitting these bullish targets super early in the week, I've said this on multiple occasions, it's gonna make me turn bearish really, really quickly. I would like to see the market trade down first. If it doesn't do that, it's going to indicate one of two things. Either we're in a very, very strong uptrend, right, that's aiming to go much, much higher, or the market's trying to get up to these levels higher so it can dump the market down when it gets up there within the time frame of this window. So again, just like the ES, the Dow is going to be in this range. In my opinion, we could potentially be in this range from the monthly fib down to the absolute low for probably another 2 weeks, right? Until we rally above and we get that aggressive push up, trapping buyers, and then eventually dump it. That's my thesis. Again, you could disagree with it. I'm comfortable with that. I'm just telling you how I'm viewing price. I'm going to give you reasons why I'm viewing price that way here in a moment. Let's go over to the NASDAQ. Again, NASDAQ with the top-down analysis on. Levels are pretty similar. We just have a couple things that I've marked out a little differently. We have this 4-hour resistance area, which is very, very representative of the 4-hour supply on ES. I only drew it here because the NASDAQ actually already took out the volume imbalance. So now I'm looking at this and this as the potential levels that the market could tap into, right? Going back to the upside. So we have a 4-hour resistance at 19,491. We have a daily supply at 20,293. There are in walls that sit up here, but I like the daily supply and the 4-hour resistance better. I checked them both. There's a 4-hour volume imbalance down here, and then there's the weekly demand zone that's down here, right? So, it's a lot going on this week, guys. A lot going on this week. But anyway, to the upside, we're looking about 10% move, right? Like 10% is crazy when you think about it, but I mean, that's basically what we've been getting. And this is the average over the last 5 weeks is 10% up. We're looking for the weekly fib, which is this 4-hour volume imbalance as well, like a double confluence sitting in here. From the weekly fib, 10.1%, we're looking at 19,717.50, or sitting right inside of this 4-hour resistance, right back to the upside. From the bottom of the range, which is where I think we'll bounce off from if we're going to be bullish for the week, from the bottom of the range, right, at 18,703, looking for about 9.59%. Don't ask me why the percentages are different. I don't know. I just use the price range tool and I mark it exactly how it says it. So 9.59%, we're looking at 20,498 from the bottom of the range, tapping into that daily supply, which also leads us to that same level for March 25th, 2025. That's on every single chart that I'm referencing as the potential target going into this week. Now that's probably about 2,000 or 3,000 points on the Nasdaq, but what else is new this week, right? So from the 4-hour resistance, I put supply, but it's the same thing. From the 4-hour resistance at 19,491, we travel up to come down. I'd be looking for about 8.86% back down to basically the daily fib at 18,497, right? Actually, this was from the 4-hour supply that I had up here. So I changed this from a 4-hour to a daily. So this is from this level here at 20,293. My apologies. 20,293 straight down. We're looking at about 8.86%. If we go all the way up to the 4-hour resistance, again, from 19,491 to 20,044.25, we're looking for 10.13%, which places us all the way back down to 17,517. And I actually like this because what this does is it closes this imbalance right here, right? And again, keeps us right busy, right? We created a huge range, and in my opinion, is to keep buyers and sellers busy down here, generating liquidity. So when we finally go up and we liquidate the highs, I think it's to come down and take out all of this generated liquidity and to go lower. But that, again, personal opinion versus objective fact. Don't worry about these lows down here. These are from last week. I just TradingView sometimes, like if you don't save stuff, like it'll leave stuff on your chart, right? But other than that, those are my levels for the Nasdaq, the S&P 500, the Dow Jones, right? And let's go into this volatility index, and I'll give you a reason. I give you my reasons behind still being bearish. It's going to start with the VIX on the 3-month, right? I said this in my last video. I'm going to reiterate it on this video. The VIX isn't lying to you. The VIX is a representation of the buying and selling strength inside of the market, right? The VIX isn't lying, right? It's just not. It doesn't tell a lie. It is objectively it. It is what it is, okay? So if we're looking at the VIX on the 3-month, we analyze it just like we do any other chart. We look at it on a 3-month and we can see how much strength, how much strength the buyers had in this one candle so far. There's still 2 months and 18 days. We got a nice strong wick. So does the 3-month really give us much other than the fact that we broke the previous 3-month, the candle from July 1st? We broke that high. That's significant, but we got to close. Like we want to close above it. We got set 2 months and 18 days to figure that out. So let's go down to something a little bit closer to price. We come down to the monthly time frame. We got 17 days and 4 hours left in this candle. What did the monthly do? If you look right here, right here, the monthly started mitigating, right, the March 1st, 2023 level, right? When I say mitigating, this was a supply zone. The market rounded up price, and we came up here and we found sellers on the VIX, which means we also found buyers on the market. Now, if you go back and watch what I'm sure none of you will do, but if you go back and watch some of my videos, I talked about this. I said the VIX will start to find sellers much faster than the market is finding buyers. This level is from March of 2023. The market isn't finding buyers until October, right? We're all the way down to October. The VIX is finding sellers much sooner, which is an indication we could be coming up higher faster, okay? Let's come down to the weekly, right? We go down to the weekly. We got this huge gap in price. We got a doji candle at the top, could indicate a evening star pattern, which we start to trade right back down into the 13s. I don't think that that's how it was going to play out. But again, personal opinion versus objective fact. Let's go to the objective fact. What did the weekly candle accomplish? The weekly candle from March 31st, right, got above multiple highs. What did the weekly candle from April accomplish? It got above the major high that we needed to see it get above. It closed in the middle, right, which is indecisive, not necessarily negative or positive. But the positive is we made a higher low and we made a higher high. That's bullish. Until that stops, I gotta give the nod to the sellers. With all of that buying that took place, think about that. The market rallied 10% in one day, but the VIX never really broke stride, right? Like that's concerning for me. That's telling me that even in that rally, the sellers are still fueling positions to the downside. Take a look at gold and commodities, right? Gold is a safe haven for people that are looking to protect their investment from potential downside in the markets. Did gold crash, or am I tripping that gold is still back at 3,200, potentially pushing toward 3,600? Now, if those things start to change, I'll start to look at the market differently. But right now, I still have my bearish goggles on. I'm just bullish at where we are right now. Looking at the daily time frame, what did the VIX accomplish? Higher highs, higher lows, higher highs, higher lows. Yeah, this is a big candle, right? This is that candle from Wednesday. This is huge. But what did it not do? It never took out lows, right? So as far as I'm concerned, as long as the VIX stays above 20, I'd like to see it obviously stay above 16. But as long as we're staying above 20, I'm still going to be leaning toward this is just consolidation, which is what I'm looking for out of the market on a daily time frame. I'm looking for just sideways consolidation, maybe a bunch of spikes or whatever until the month starts to end. And then we start getting ready for the sentiment of April. And if that happens, if the VIX is consolidating at highs on the daily time frame, that is not bearish. I'm gonna say it again. If we're consolidating at the highs on the daily time frame, it is not bearish. It is consolidating, generating liquidity to go higher. If the VIX continues this behavior, the market is going to go lower. I'm here to tell you, before anybody else does, yes, we can continue to be bullish, but if this VIX finds buyers above 35, stand the F by, because we're going to start to see much larger movements than what we've seen. So we'll see what happens, but those are my thoughts on the volatility index. All right. Moving on to things that I think we need to know for the week. We'll start with the news. Again, it's going to be a shortened week for other countries. I think Europe and everybody's going to be celebrating Good Friday. Shout out to Alexis for putting me on game because I didn't know what it was. But anyway, Monday, no news Mondays, lots and lots and lots of speakers leading to that consolidation, that choppy behavior we've been seeing. Maybe we don't, maybe we do. I don't know. All I know is that with no news, the market tends to either go in one direction or just chop up, right? Chop up or down in one direction, usually, but we'll see. Going on to Tuesday, April 15th, what do we need to know? Absolutely nothing, right? Empire State Manufacturing, fairly normal day, right? Going into Tuesday. Again, this could be one of those weeks where the market just chops around inside of that large range. Then we get Wednesday, core retail sales, finally some red folder news. I guess those people that only trade on red folder news can finally get a day that they can trade the market, right? But core retail sales at 8:30, and then we have capacity utilization rates and industrial production going into 9:15. Pretty much a pretty calm week, right? Then we have toward the end of the day, we have Fed Jerome Powell speaking inside of that PM session range, right? So all of the FOMC cronies have been speaking, and then he's going to actually come out and speak. And this will move markets. We know. And this is why I also think we have an opportunity to be in a very large range, because the market is going to be in a huge indecisive territory until it gets something definitive to make it sell or make it continue to buy. So unemployment claims on Thursday, this is going to be huge, because if this number continues to go lower, the Fed's not going to see a reason to cut rates. Will they? I don't know. But based off what they've been saying, you never can take that with a grain of salt, but based off what they've been saying, they're not going to start to cut rates until this unemployment goes up, which is diabolical when you think about it as a person, because in order for them to give you relief on interest, you got to lose your job. That's essentially what that's saying. It sucks, but it's the truth, right? So now going down to Friday again, like I said, it's going to be a shortened day, not for US banks, but for other banks, right? You got Canada, Europe, Great Britain, basically everybody but us, I think, is on a bank holiday. I don't know why we're not closed for Good Friday. I thought we were, but anyway, that'll be a shortened day, but it'll probably be a day that I trade the commodities or something, because they're not really affected by this. I'll probably trade gold on that day, and I already have it kind of charted up. So like I said, the news is pretty whack this week. If you trade news, you probably won't even trade that much this week. But this is what's more important. Specifically Monday, Goldman Sachs reports. This is the financial sector week. Next 2 weeks, you're going to see a lot of volatility inside the S&P 500, whether it be the up or the downside. The projected movement, I forgot to pull up the site that has this, but the projected movement on Goldman Sachs options chain is plus or minus 10%. That's the largest projection in financial bank history. Okay. So if you don't think volatility is coming, you're crazy, right? Now, those things aren't 100% accurate, but somebody knows something that they're expecting that large of a move. right? And if this move is going to be large for Goldman Sachs, then what do you think Bank of America, Citibank, right? Like all of these other banks and financial sectors are going to be following along suit. Netflix plus or minus on Friday is going to be 5%, which again is very, very large, even though it's usually pretty large for Netflix anyway. But my point is, this week is there a lot of financial earnings reports, right? And if you copy this, go to Earnings Whisper. That's all I'm really doing, right? You can copy this, and it'll just keep you abreast on like where this volatility is coming from and the reasons why these things may be happening. So Monday is going to be huge. Tuesday is going to be huge. Even though we're not getting a lot of news, you need to understand the other things that could be market drivers, right? And then Friday is definitely Netflix is a market, or Thursday is definitely a market driver, right? Like this thing is going to drive the markets, right? So we'll see what happens on Friday. I'll have to check to see what the schedule is for Friday on the futures market. I honestly didn't check it because I wasn't even planning on trading the indices on Friday. I was going to trade the commodities. So, but that being said, that is it, man. That is it in a nutshell. That is the top-down analysis. Again, guys, if you need any assistance, right, please don't hesitate to DM me inside the Discord. If you're watching this on YouTube, drop a comment in the section in the comment section, and you can DM me on Twitter or whatever. And I'm not opposed to helping anybody out, right? So, but we do offer a premium service. The Trader Shop Discord link is in the description down below. If you hit the like button, you hit the subscribe button, just come back and watch us next week because we do this every single week. That being said, my name is T Hobbs. This is the Trader Shop. I'll catch you guys on the next one, man. Peace.